When you save up into retirement accounts like your 401k, do you avoid FICA tax? Got that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, FICA, that four-letter F word that you've paid, that you've seen deducted, pulling money from you in every paycheck stub, every single stub since you were a kid, your first job. So what is that? It is an act. It was an act of Congress back in 1935, and it funds some of our social systems, so Social Security and Medicare. So FICA is the Federal Insurance Contribution Act, again, started in 1935. What it is 7.65%. It's a 7.65% tax that comes out of your paychecks up to the Social Security wage limit. Get to that in a second. So you pay that 7.65% on all of your wages, or well, I'll get to that, all of your wages, okay? So not interest, dividends, capital gains, that sort of things, but paycheck money. But then your employer also pays another 7.65%, again, all the way up to that wage limit. 6.2% of the 7.65, that's the part that goes to Social Security, and that's up to that Social Security wage limit, which for 2023 is $160,200, and for 2024 increases to, I think it's $168,600, something like that. So pretty significant increase. So you're going to pay the 6.2% of the FICA on all of your wages up to that level. If you make 200 grand, then you're going to pay the 6.2% up to the 160,200, but then you won't pay the Social Security portion, the 6.2 on, from the remaining income up to 200,000, or, if you make 300, 400, whatever it is. There's been lots of chatter about, well, do we create a donut hole, and once you start earning more than 400,000, we bring that Social Security portion back? There's been lots of discussion about that. Hasn't happened yet. That's 6.2%. The remaining 1.45, that actually goes to fund Medicare. It's not enough, but I don't want them to increase taxes. The Social Security portion is not enough either, by the way. You know that. But there's no limit. There's no cap on the Medicare portion. So it doesn't matter if you make 100,000, 200,000, 500,000, $1 million. There's no cap on that. So 7.65% is FICA. 6.2 of that goes to fund Social Security, and that's up to a limit. And then the 1.45 is to fund Medicare, and there's no limit on that. So you pay that out of every paycheck. Your employer matches that. If you're self-employed, you pay self-employment tax, which is both sides of FICA, okay, 15.3%. And again, the 6.2 and 6.2, so 12.4 Social Security portion goes up to that same wage limit. If you have self-employment income well above that, then you avoid, then that Social Security portion would stop. So this is part of why financial folks like me often say, hey, make sure you're funding that 401k. I would be doing 15% or more, and you might say, gosh, that seems like a lot. Well, Social Security is not adequate to fund your retirement alone, and yet 12.4% of every paycheck of yours is going into Social Security. And so if 12.4% is going into your Social Security fund, and that's not enough, you've got to be doing something more, and so anyway. So that's FICA. So got this question recently, and get it from time to time. It's something that most people don't really think about, either because everyone is already aware of the answer, or it's never really occurred to them, and that is, well, when I save up into my retirement accounts, and I'm saving tax, I'm avoiding tax, or I'm sheltering tax, do I avoid FICA on my 401k contribution? So if I make 100 grand, and I contribute 15%, because that's what I'm supposed to do, 15% towards my 401k, though. So I actually, have a deduction of 15 grand. I pay, the 85,000 that's left. That's what lands on my tax return. So I avoid income tax on that 15,000. But do I avoid FICA tax as well? Sadly, the answer is no. You're going to pay FICA tax on your gross wages and your retirement savings, the amount that you contribute, whether it's pre-tax or whether it's Roth. you're still going to have to pay FICA on that. So that's 401k. Same with simple IRA or 403b. What about an IRA or Roth IRA? Same thing. Those, the Roth IRA doesn't give you a tax benefit today. It's not a tax deduction today. However, you're not avoiding FICA. You're not avoiding FICA on your pre-tax, your traditional IRA contribution. Those dollars then, because you've already paid FICA on them, they're then invested and they're sheltered from tax. They grow, and then the pre-tax dollars, as you draw them out in retirement, you'll have to report that as income, so federal and state taxes, but you won't have to pay FICA on those dollars as you draw them out. So the growth on these dollars, there's no FICA tax on that. So yeah, bad news. The unfortunate truth is you don't avoid FICA tax when you're making contributions to your retirement account. Now, what if you're self-employed? If you're self-employed, so just hanging a shingle and you've got a side hustle, something like that, you might be aware that one of the retirement plans that's now available to you is something called a SEP IRA, a simplified employee pension. And many people think, well, if I fund my SEP, that will help me avoid self-employment tax, because again, self-employment income, you got to pay both sides of FICA, which is that's 4-letter F word times 2, right? That really hurts. So how can I avoid that? Can I contribute to my retirement account and help reduce that FICA? Unfortunately, no. And there's a misconception on this. So when you contribute, if it's just you and you're contributing to your own SEP, your own simplified employee pension, or if you're doing IRA, that sort of thing, that's a deduction on the front page of your tax return. It's not a deduction on it's called Schedule C, the business portion. So it's not an expense to your business. Many people, as they're kind of listing out their income and expenses, actually list it as an expense. It's not an expense. So it does not reduce your self-employment tax. It does reduce your income tax, federal and state income tax, does not reduce your FICA tax. The confusing part is if you have employees and you are doing a SEP IRA contribution, essentially no one does unless it's a very, very small family business. If you're contributing to employees' SEP IRA, then that is a business deduction, and the contribution to employees' accounts does save you FICA. Just like if you owned a small business and had other employees, your matching contribution to their 401k or their simple IRA, that's a deduction for your business, and that helps you avoid paying tax on those dollars because it's an expense. But the SEP IRA, if you run a small business and have employees, if you're contributing to theirs, that is a deduction. Most people don't do it because you have to contribute a certain percentage of their salary into their SEP, and you have to do the same for every single employee, and so it's a very cost heavy, a very expensive plan. Gets a lot of money into retirement accounts for your employees, but most folks, most small business owners say, yeah, that's too much of an investment. All right, so last two sort of honorable mention ideas here. If you are a pastor, if you are an ordained pastor, yes, your 403b contributions actually do avoid FICA. This is the exception to the rule if you're a pastor. And now those of you that are just looking at tax benefits might say, well, geez, I'm religious. Maybe I should go get ordained and get this figured out. Well, there's a trade-off to that too. Pastors have an extraordinarily unique tax situation. In fact, all of their income, even though it's wages, is actually, they're considered dual status, so it's actually it's taxed to self-employment tax. So where you might look and say, well, geez, I'd love to avoid FICA tax on my 401k contributions, pastors are subject to self-employment tax on all of their income. They get some housing allowance deduction for federal tax and state tax, but it's all subject to self-employment, except what they contribute to their 403b. So if you are a pastor or know a pastor, or your child is a pastor or grandchild, make sure that they're aware of this and taking advantage of it, because this is an extra incentive and encouragement for pastors to be funding retirement. And then lastly, last sort of honorable mention, this is one of the reasons why, if you have a qualifying high deductible health plan, funding your HSA and possibly considering it as part of a retirement account, it can be so beneficial. Why? Because your HSA contributions that you make out of your paycheck avoid FICA. And we've shared that lots of times. This is one of the unique features of the HSA. When you contribute right out of your paycheck into your HSA, it avoids FICA tax. Now that means that the wages that you just deducted and deferred don't count when they're calculating Social Security, but for most people that is a rounding error and it's not a significant difference in what their Social Security would be. They'd rather avoid the tax and contribute to their HSA. All right, I hope that helps. Work with your certified financial planner. Make sure you've got your own tax shelter strategy. You're aware of which accounts you should be funding, what the tax benefits are, and how much you should be funding to stay on track with your goals. Work with your CFP on that. If you don't have a CFP on your team, contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or send us an email, info@Korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.